What's up, everybody? Hope you guys are doing awesome on this amazing Sunday. And I just wanted to kind of start out with one of the things I committed to do. I've laid pretty low during the last 10 years while I built the Collective Genius Mastermind, and have really kind of come out over the last few weeks choosing to be a leader through these challenging times. And so, by the way, I ask you guys to excuse my my get up here. I'm gonna go do a little jet skiing, got sunscreen on, all that kind of stuff. But here's what I wanted to talk about today, right? The big question right now is not about how to thrive with all of these changes. The big question is, can you survive the gap, okay? And the thing that I want to share with a lot of people is between every economic expansion, okay? Between every economic expansion and every economic depression is what we call the gap. Okay, there's money to be made as real estate investors. There's money to be made as real estate investors, and the opportunity to serve and help people in expansion and recession. But the reality of it is that in almost every case, there is what we call the gap. And between those 2 points, right? Between the expansion and between recession is a gap where not a whole lot gets done. Hey, Mr. Barnes, how are you, sir? And for those of you that don't know, you're just now kind of tuning in, my name is Jason Melly. I'm the CEO of the Collective Genius Mastermind. We're the oldest running, longest standing father of the majority of all the masterminds out there. Most of them are folks that have come out of our organization, started their own. But we have taken and really put the top real estaters in the country. Most of our members are flipping north of 100 deals. Many of them have hundreds and hundreds of rentals, and they are thought leaders. And so what we do is we put them on the fast track to becoming visionary leaders that scale their business, build wealth, and give back, right? And so in the process of doing that, most of them, like myself, have been through many of these resets, whether it's the coronavirus, whether it's 2008, whether it's 9/11. A lot of us have been through these resets, okay? And the key here is understanding that there's a gap. Everybody is out there talking about, oh, we've been waiting for this and we're going to crush it. And the reality of it is you got to first figure out, okay? You need to first figure out, can you make it through the gap? Not a lot happens in the gap, and that's starting to happen right now, okay? Let me explain. Everything starts, all this is based, much of it is around liquidity and the credit markets, okay? And what's happening right now with all this uncertainty is a lot of the lenders, like right now, trying to get cash out refis or long-term money for rental properties is almost non-existent, okay? Unless you're deeply embedded with private lenders or private financing that has fairly deep pockets, pretty challenging right now to get that type of capital, okay? And the same for fix and flips, what's happening is lenders are tightening up their LTV requirements and charging more fees. And so what the bottom line, what boils down there is you're going to have to bring more money to closing, which requires more liquidity on your behalf. And so things are getting more challenging to exit, okay? Pay attention to exit on the backside of the deal because the capital is drying up, and then it filters all the way down, right? We've talked about, if you're trying to buy rentals, the capital is getting harder to get. Like, you're going to have to go to your local banks probably more than likely. And if you don't have your act together financially, that's going to be tough. And then if you're rehabbing, you're going to have to bring more liquidity to the table. So if you're not well capitalized personally with liquidity, that's going to be tough. And so contraction begins to happen because fewer homes can run through the pipe because of the drying of liquidity and credit that's taking place. Now, here's the next thing that happens, right? All of that flows downhill. So if you are wholesaling, if you typically you're wholesaling to a rehabber or to a landlord, it's getting more difficult to them, unless they are 100% cash buyer, it's getting more difficult for them to actually be able to purchase properties from you, okay? And so that all flows downhill. Now, on the flip side of that, properties are probably going to get easier to purchase right now because more people are going to want to sell because it's harder and harder for buyers to buy on the other end. And so what begins to happen is say you're generating your own leads, you start to struggle to identify where values are, okay? And they're changing weekly. And so what happens is things for a while, it could be a month, it could be 2 months, it could be 3 months. I'm not here to debate on how long this is going to last. I do think it's going to be, 4 to 6 months minimum before things get back to normal, because we're not really doing enough as a country to stop this. But I don't want to get into that. So during that time frame, what you have, okay, is called the gap. It's harder to transact, and things are getting harder, right? And you could be watching this, you're like, I'm in Ohio, everything's flowing. That's because you haven't had a major breakout yet. You could be in California or New York and say, man, they just declared construction non-essential. My business is shut to a halt. I can't rehab. Or even if you're a wholesaler, I can't sell to rehabbers or landlord because they can't get construction done, right? So depending on where you're at, this message could be completely different for you. But in the gap, it's difficult to transact. And if you can't transact, if you don't have liquidity, you are going to have challenges. And so the best way to figure out how long you can survive the gap is you're going to have, and I've talked about this for the last week or so, if you haven't done this exercise, you better sit down and do it, okay? This is not amateur hour in any case of the imagination. And you're going to need to sit down with your P&L, and you're going to need to go through and take your expense section from 2019, take your totals, and drop them into a new tab, all right? Force rank those totals by highest to lowest, and then you need to examine each of those. What's up, Justin Baker? You're in Washington. It's shut down, right? Like, this is what I'm talking about. It's becoming a reality right now. You guys in Washington you're gonna be in the gap, and other states are gonna follow, right? There's probably people watching in other states right now, like, hey, everything's cool right now. But so you got to think about this, right? From a coastal perspective, that's where their population is, right? Washington, California, New York, now Florida's starting to become a hot spot, and that's going to move inland, okay? And so if you're not experiencing hot spots or crazy outbreaks, it's probably coming. And so the experiences that Mr. Justin Baker is having on this call, where things are kind of shut down, are going to be a reality for everybody. So you need to prepare for that now, okay? Because if you can survive the gap, you will thrive once, in 2 months, after 2 months of downward GDP is when it's an official recession. I think we're headed there to be the reality of it is, but there's a massive opportunity even in recession, right? But we have to get there first, and in between is what I call the gap. And so to assess if you are going to survive the gap, go to your P&L from 2019, take your expenses, cut it over into a new tab, sort it high to low, and you need to begin to examine, if you will, you got to examine what your expenses are, and you need to create 3 buckets, okay? We got quite a few viewers on here right now, so for those of you that don't know, just real quick, my name is Jason Medley. I've got the longest standing real estate investing mastermind in the space. My members, about 140 of them, collectively flip north of about 20,000 units a year. We are an organization that is really the head of the dog when it comes to having the most elite investors in the country. How are you doing, Mr. Rafael Cortez? And so if you ever want to learn a little bit more about us, you can go to learnmoreaboutcg.com. But what I'm talking about right now is once you've got your P&L sorted by expense, you got to go through and examine very carefully where you have the opportunity to cut, right? Now, if you're in Washington right now where things are shut down, you need to be looking at that immediately. If you're in Ohio where everything is just kind of cruising along, you might be like, oh, I don't need to do that, right? You need to do it now while you're of sound mind, because if you reach that place in your business, when it's actually time to do it, you're going to be emotional and you won't be able to make sound decisions, okay? So once you've got your expenses sorted in your P&L, what I want you to do is I want you to walk through and I want you to create 3 buckets, and those buckets are driven by time frames, okay? So we're kind of at right now at the end of we're at the end of March, right? So you probably need to have 3 buckets. You need to have May 1st, June 1st, and July 1st. And you need to put revenue limitations on each of those buckets, right? So revenue 1 is if I don't make X amount of dollars, okay? If I don't make X amount of dollars by May 1st, which is about a month from now, I'm going to have to cut out these services and possibly these employees. I'm not suggesting anybody cut their team. I think we're going to have a big call to tell you how to use the CARE Act to potentially avoid that. I'm going to be doing that on Thursday at 12 p.m. Eastern. I encourage you to mark your calendars. I'll be sending out an invite here probably tomorrow. We'll be telling everybody about it on Facebook, but you're gonna have to force rank your expenses and go through, create buckets 1, bucket 2, bucket 3, May 1st, June 1st, July 1st. And if your revenues begin to fall because of the things that are happening, hey Eric Hensley, how are you doing, sir? If your revenues are beginning to fall because your state is tightening up and more restrictions are getting put in place, You're going to have to know what types of cuts you have to make in order to survive the gap. You need to think about it now. So, say my revenues, if I make less than $250,000 in gross revenue and my profit is below Y as of May 1st, then I need to do these things with respect to that. If I make less than X amount of dollars in gross revenue by June 1st and my profit is below X on June 1st, I need to make these decisions as far as cuts go internally, okay? And so my point to you is that you've got to figure out, can you survive the gap, right? Another way to figure out if you can survive the gap is you need to take what your expenses are now, go through that process of trimming them down, right, over the next 3 months of what that would look like if you had to do that. Then you need to figure out how much cash you got, how much liquidity do you have right now. This is far more complex depending upon the complexity of your business, okay? But I'm trying to make this simple so it applies to everyone. You need to take your expenses, assume revenue and profitability isn't growing, you're running sideways. How much burn rate do you have, right? How long can you survive the gap? Those are the big questions. Then once you begin to figure those out, once you prepare, right, to survive the gap, then you feel calm, then you feel collected. Now you have the ability to lead. You cannot lead from a place of panic, okay? You must create an environment in which you assess your situation, be extremely calculated so you can be calm and lead. People are looking to you right now as a leader. You cannot lead from a place of panic. By the way, some people are commenting about my sunscreen. I was really compelled to do this video right now. I was going to come out here and do a little jet skiing, take a breather. I'm going to jump into doing some work later today, which the years of working on the weekends for me are behind me. But again, I'm stabilizing things right now. But that's what we should do, be in stabilization mode right now. And then once you're stable, once you're calm, okay, you have the ability to lead like leaders lead, all right? And so that's some great insight right there, and you've got to be able to survive the gap between every expansion and every recession. Keep in mind, you can make money on either sides of those platforms or either sides of those economic situations, but in the middle, things get slow, things get choppy, okay? And that's what's happening right now. Things are getting slow, things are getting choppy, it's getting harder to transact, okay? And you're going to have to figure out, how long can you survive the gap? If you can survive the gap, you will be set to thrive and serve a ton of people, right? You'll be able to serve and help a ton of people that are going through very challenging times, and your business will excel as an investor once we get to that actual, depression, if you will, or recession, if you will. But you must first survive the gap, okay? With that said, guys, I'm going to wrap up. I'm going to have a little fun and sign off here. If I can do anything to help anybody, hit me up. You can send me a direct message. Yeah, Justin, you're saying it's hard to know how long the gap will be. Yeah, things are happening so fast right now, brother, that it is extremely hard, okay? Things are unfolding. This is only a couple of weeks old. But even if you don't know how long the gap's going to be, you need to figure out what your burn rate is and how long you can stay in business, okay? And you need to have those buckets that determine your revenue breakpoints and profit breakpoints to figure out if you're going to have to cut expenses or even potentially people, what that looks like, all right? Again, I think we've got some great news with the CARE Act. I'm going to be sharing that with Marcus Krigler on Thursday. I'll be sending out an invite to everybody. We're going to dissect literally how the CARE Act can help you keep your people, cover a ton of your expenses, and in the process likely end up being forgivable, all right? Even with that, though, I think things are still going to get super choppy. There's going to be a backlog to even get approved for that, etc. So with that said, guys, I want to let you know that I'm here to lead during this time. I was built for this. I am a warrior. I've been through this is my third corona situation, if you will, right? We've got this. I had 2008 financial crisis, and in 9/11, this is my third one. And here's the thing that I want to say before I wrap up, okay? The virus is not the problem. The virus is revealing the problems, okay? Let me say that one more time. The virus is not the problem. The virus is revealing the problems, right? Like right now, if you are stressed out about liquidity, that means that you got to go back and figure out what you are to learn from the last 8 to 10 years of economic expansion, right? Did you scale your business properly? Scaling is not simply a function of just sales and marketing, right? To build a financial structure in place for your business that allows you to make it through times like this, you've got to have a methodology of cash management, which allows you to take money, put it in the form of retained earnings for your business, and take money and put it in the form of a rainy day fund for your family, right? Those, now granted, along the way, that might cost you some opportunity, but I can assure you there are a lot of people right now that would trade some of that opportunity for liquid cash in the bank. Everybody wants liquid cash right now, okay? And so I encourage you, rather than being like, oh, this coronavirus is the problem, it's revealing problems that all of us have, okay? Personally, for me, I'm in the event business. I've figured out, right, like I need event insurance. So it's showing all of us problems, but the biggest one is liquidity, okay? And if you don't have any liquidity, you've really got to ask yourself over the last, however long you've been in the business during this expansion, have you been scaling your business correctly? And it is not simply a function of sales and marketing and more deals and more deals and more deals, right? It's about having a method which you embrace the fact that profitability is not simply something that shows up on the bottom right-hand corner of your profit and loss statement, okay? Profit is something that you physically extract from your business to protect your business and to protect your family, all right? That's what everybody's worrying about right now. How do they protect their business? How do they protect their families right now? And the biggest thing that everybody wants is cash. And so cash management is absolutely critical. If we get out of this and everybody survives, and it's a get out of jail free card, don't have to use it twice. Put structures in place, right, that require you off every deal or every widget or whatever to peel profit off that you keep in retained earnings for your business, and profit off that you keep in retained earnings or a rainy day family fund to take care of your crew, okay? That's the best advice I can give folks, is look at what you're being taught here. And we're all being taught stuff, right? So with that said, keep an eye out. I am going to be running a killer webinar with Marcus Krigler. He's the resident CPA for a lot of Collective Genius members. Many of these guys are big hitters with pretty substantial net worth, and we are going to be dissecting the CARE Act and how the CARE Act, quite honestly, will help you survive the gap as a real estate investor. So on the other side, you're able to thrive, even if it turns into a recession. There's money to be made in the market up. There's money to be made in the market down. Even in a recession, we as investors will have the opportunity to serve people and help them through these challenging times. And so be on the lookout for that webinar, okay? Justin Baker, thank you, sir. I am going to have some fun. Thank you. You told me, Justin said go have some fun. That's what I'm going to do. I suggest everybody do that today. It's a crazy world right now. And I want to remind everybody, this was just clear advice on how to lead right now through these challenging times. I am an eternal optimist, but I also like to embrace some realism inside of that optimism. I'm not a pessimist. I am a bull. I was built for this. This is my third time. I am a warrior, and I encourage you to be a warrior every single day. Put a fence around your mind. Put a fence around your body. Don't let your family see you concerned. March forward. Be responsible. Be calculated. Operate with precision, and think about everything you're doing right now. All right? Peace out. You guys have a fabulous Sunday. Nothing but love over here from Jason Medley. If you ever want to learn a little bit more about what we're doing, you can check us out at learnmoreaboutcg.com. I'll talk to you soon.